Hello, guys. This is Social Trades once more. So here you see this is silver. This is a suspension block here. If we do this there and I zoom in, you can see there's a volume imbalance there and also a volume imbalance here. So this is a suspension block. So we went low outside of it here, we went above it, and we went outside of it again. So now that is done, this action of going outside of it like this and going outside of it. Here on this return, we're demanding that all the bodies should remain here in the lower half, and you can only work on the upper half like it did here. And it did that and it closes outside like that. So it's weak. It's telling us that it wants to go lower. By that very action, telling us that that is weak. We're gonna watch how this is probably on the daily. This is probably on the daily. Listen. Okay. So you're gonna watch as it goes lower, probably watching this week too. So we want to see this thing go lower like that. Want to see it go lower, potentially simply taking this low here. And I'm showing you silver because if you can see silver, then you'll be able to understand that gold itself has a higher probability of doing its own thing. So this is that weekly suspension block that we entered into. I'm gonna move it to the side so that you can see something. You see, once we left this one, this fair value gap here, which is from this candlestick's low here, and this candlestick's high here. But then there's a volume imbalance there, so I borrowed the range. You see that? I borrowed the range. So once we leave it and go to half of it and leave it again, let me move this here. You see, everything was kept on this level here. This level is shown from where? From the high there to the low here. So 0.25, when you're grading this should be kept right there as you see it. Even here it's kept as you see it. The bodies can go above it, this level. The wicks, I mean, can go above it, but no bodies should be printed above. And so it did not happen like that. It did not happen like that. And so now we see that we have we have now we have this one here. You're looking at this inversion for value gap here. And again, there's no need for it to be traded to, but we're just looking at it like that. So this thing wants to go lower, as you said, can go lower from right there, wants to go lower. But we also, because we're also gonna be watching this low here, this week, or this one here. So we're gonna be watching it again when we come to it here and see how we're gonna use it. But we're going lower here. And then let's go to the gold. So with the gold, we know that this one's it's a weekly array. You can see that it's a weekly array. We also bearish here on gold. We just wanna see this is an inversion here. I'm gonna make it yellow so you can see. There we go. That's where we get here. It tested there and then seems like we wanna go lower. So here in gold, if you go on the weekly, come on, gold. Yeah, we're just seeing it that it wants to go lower. Also, there's this SAS here. So you're gonna pull it, but then we also used this here. Let me pull it. This value gap here. 50% of it was used. And now we are below this week here. So this red one. So below it, as long as we are below it, we're gonna anticipate more lower prices. So we're gonna watch it come to this week and then see if it goes below it, and then we can take this low here. That's social trades, and that's gold. But I'm not trading gold this week. I'm just showing you. I'm trading the easy one, the Nasdaq. Buying the Nasdaq. That's the easy one. Let's buy that. And this is just for educational purposes. The social trades, and that's value at no cost. Boom.